Give it a go on Finbond. It's a Pretoria-based bank offering deposits, credit and insurance solutions.
Yeah, so the founder here, Willie van Aardt, who actually was a Potch professor, has done a tremendous job. You know, there's always somebody shooting the lights out in the smaller loans-driven business, and it's their turn currently.
Market cap 1.9 billion rand, so very well similar to Sasfin. PE here of 28.9 and a dividend yield of 1.1%. Expensive.
Very expensive. Interesting business though. They've got a nice loans business in South Africa, the traditional business, and really trying to push it. I think if you read some of their commentary, trying to emulate Capitec in a way. However, they have a much higher cost to income ratio, so at a significant disadvantage, but pushing all the right things, fintech, cell phone banking, and trying to become more dynamic. But then on the other hand, they've got these payday lenders in the US and Canada that they've been buying quite aggressively, and they've got quite an aggressive internationalization strategy, and they want the bulk of their earnings, in fact, to come from offshore over the next 5 years.
Interesting strategy there,
yeah,
Paul?
Which is kind of new. Look, payday loans in the US is big industry, fairly tightly regulated, so it's interesting they're buying their way into that. The other interesting thing, which you alluded to earlier, Lance, is their shareholder base. So they've got Net1 as a shareholder, but they've also got that New York-based Sean Riskovitz crowd, Midstream and Protea, whatever their names are.
That's right.
The guys that recently took a big stake in Taste Holdings. So it's a US-based hedge fund that specializes in South African small caps, and they're getting interested in this one, which is, I suppose, partly perhaps where the US deals come from. I don't know.
Yeah, potentially, yeah, looking to take their IP. They say they've learned a hang of a lot in the South African small loan space and transplant that into North America. So they believe they have some advantage in that respect.
Just a question though, when it comes to small loans, effectively what you do is you have a depositor base that you give above average returns to, and then you have short duration loans that you charge a lot for. That's great, and it's always good when it's going well, but the problem is, as we know from this sector over the years, it can get you into trouble because it can get tricky if there's a downturn or if you have an uptick in defaults.
So you're saying there's a higher risk associated with this one?
You know, just exactly.
Very much so, yeah, and very susceptible to regulation, unfortunately, this sector.
Did we look at the share price?
Yeah, no, it came out of nowhere. People didn't even know what it was and what was going on back in the day. So it's shot to a fairly substantial level now. And I don't know, I mean, foreign earnings, the US, I suppose it depends what they bought for.
Hot or not, Lance?
Too expensive, so not hot.
Hot or not, Paul?
I'm just also going to go on the not hot side on account of the heightened risk. But of course, you know, with risk comes potential rewards. So not hot for
Not
now.
hot.